Hey guys, and welcome back to the Dutch Investor channel. Today I want to share with you my investment checklist, and by doing so I'm going to list in this video the 10 most important investment questions, and at the end of the video I am going to show you how the sheet works. And yeah, you can download my investment checklist in the description below. It will be a link to my website, and I have made the download available there. I believe it contains over 40 questions. It is not a permanent list. I think I will adjust it as I progress or continue my investment journey. So it could be very well the case that that list is going to contain more questions in the near future. But I'll keep you posted on that one. So let's start with the 10 most important questions. And the first one is, do I understand the business? And what do I mean with this is that you need to understand how the company generates money. If you don't know that, then you probably do not understand the business. So if you think about a shoe company, like you know that they make shoes and you know that they sell them, and that basically you know how they make money. But there was this company that I was looking into. I think it was called Burford Capital or something like that. I think it was listed on the London Stock Exchange, and they were basically in financial legislation. And like I understood how they made money, but the risks involved and all that stuff, that was going to be a real challenge. And to see how they make their financial statements and stuff like that, it was like I didn't understand it well enough, so I shouldn't invest in that business. And you need to define that stuff for yourself as well. So you need to know at least how the company generates money and also understand the risks that come with it. And it's also important to know it well enough for future decision making. And what do I mean with this? Well, if you buy a company, you probably think that it's attractively priced, but are you aware when you will sell the company? What if something changes in the macroeconomics environment, or what if something changes on a business level? Do you know it well enough that you know when to sell it? That is something that you need to keep in mind as well. So you always have to understand the business. Second most important question is, how would I define the business? And with defining the business, I mean the type of company you are investing in. So I don't mean the sector or the industry. No, I'm talking about, and I've listed these in the question, in the checklist in the description below. But I'm talking about, is it a slow grower? Is it a medium grower? Is it a fast grower? Is it a value play? Is it an asset play? Like I have named 6 in the sheet, so you can check that out. But what is more important, in my opinion, is that when you have more investment skills and you know how evaluating a company goes and stuff like that, it is important that you're going to create your own categories, and you're going to do that up front. So before you're going to read into a business, you are going to know what kind of categories you have, and then once you understand the business, you are going to put it in one of your categories. So I've added 6. um, I like 2 that I didn't really list because I haven't really defined them yet, but that is hypergrowth and value growth. I'm going to make a video, I think, about value growth because that's the most appealing one in my opinion, but this will get you started. Yeah. Question number 3. What is the 10-year compounding annual growth rate? And then I'm talking about the ROIC, meaning the return on invested capital. This is basically a number that you tend to be able to get from any financial financial statement, but I mean the websites that provide the financial statements, like Finance Yahoo, Amazon Money. There's also one called QuickFS, which also shows this number, I'm certain. So it's quickfs.net if you want to check that out. What does this number tell you? Well, it tells you how well the company is spending its money, and it's going to show you that number over the past 10 years, so you can see over the long run how they spend their money. I'm always aiming for about ROIC of above 15%. Obviously, if it's sometimes 12 and sometimes 20, we'll average it out. but the compounding annual growth rate of an ROIC should be 15% or higher. Then question number 4, how are the operational growth numbers? And what do I mean with operational growth? Well, I like to look at revenue growth, earnings growth, and free cash flow growth. And I think you can already guess which one I like the most, and that is free cash flow. So these are just numbers that you can check, and if you have seen some of my previous videos, you know that these are always numbers that I check out. And I suggest you do the same. I have in the sheet I have the 3-year growth and the 10-year growth numbers, so you can just fill them all in the spots that I have assigned for that, and then you'll know the numbers. But these numbers, again, you can just find them on the websites that you are looking at the financial statements. Basically, you don't need to calculate them yourself. You could, but it's not a necessity. Question number 5, does the company have a moat? I think if you have been investing for a while, you know what a moat is, but in general, a moat is an advantage over the competitors in their industry. So what makes this business unique, and what, how do you say that? How do they differentiate themselves from their competitors? So you always want to know what their moat is, if they have one. And it's also good to know that if they don't have a moat, that you are aware of that, so you know that there's not something unique about the business, and that will probably have an impact on the way you view the company or the way you value the company. And I think it is hard to identify moats, and I think it is important that you learn how. So I've included this question, but if you are not really aware of how to identify a moat, I'll think in the future I'll make a video about it. I don't have anything planned yet, but if you want to know it anytime soon, I suggest you Google it and you read more about moats of companies. 6, the survivability. How many months can they survive? I have included these in most of my research, and this is something that the calculation I made myself, and the calculation is also shown in the Excel sheet, in the checklist. And this is mostly important for when a black swan event occurs. And what is a black swan event? Well, it is something surprising and unlikely, and basically something that you can't foresee, but you do want to know if a company would be able to survive something like that. And yeah, I included the calculation in checklist. But what I want to say about survivability is it's not that easy to calculate, and the calculation that I use is mostly focused on their cash position, and you don't really see that, so that makes it unique. And I think we are currently living in a black swan event, and you know about the outbreak. Some might say that they could have foreseen it when it happened in China, but I don't think in general that you know the impact on an economy until people have made the decisions afterwards. So I don't think you should try and convince yourself that you are going to be able to foresee these events in the future. So you just want to check up front, is a company able to survive, and how many months will that be? So just a good question to include. 7, does management have significant skin in the game, or just skin in the game? And yeah, it is an insider stake is important for incentive. What do I mean with that? Is that the more the management owns shares in a company, the more likely they are to increase the share price, because they also benefit from that. And if they do not own the business, why should you own the business? Because they know more about the business than you and I. So if they do not want to have extra stakes in the company, then I don't think you should want that either. Number 8, have insiders been buying shares recently? This is a pretty straightforward question. It is safe to say that insiders know more than you and me combined. So if they are buying shares, that's probably a good sign. And yeah, if they are buying, chances are that you should do that as well. Because if they think that the company is doing well, if they think that the company is attractively valued, those are the moments that they're going to buy shares. So it's a check that if they're doing it, it's going to help you make a safer decision, I would say. It just gives you a little bit of more backup, like you're not the only one who wants to buy this company. Also, the insiders want to, so it's a good sign. On to question number 9. How is the company valued? I think in general there's a lot of consensus about people who say if it's an amazing company, it doesn't matter what price you pay. But in my opinion, the price always matters, even of amazing companies. What do I mean by this? Is, let's say you buy an amazing company, but you buy it far more than it's worth at that time. Then even if the company, let's say that the multiple is trading at 30 or let's say 40 times the current earnings, and the earnings have been growing for 15% for 5 years. That would mean that they are going to double the earnings in 5 years. But if in 2 years or 5 years from now the company is no longer trading at 40 times the earnings but 20 times the earnings, you would not have any increase in share price. So in my opinion, you should always look at how the company is valued. And number 10, why would I not want to buy and own this stock? This is the final question. This is probably the most important one, but I cannot put this at the start because you need to first go through all the previous questions and then you need to answer this one. So when you are completely convinced that a company is going to be great and that a company is going to do well and that you want to own this stock, that is when you need to ask this question. And then you need to dive deep and you need to go research deep and you need to how do you say that? You need to put a lot of time and effort in answering this question. It is not an easy one. And you need to look for things that you've missed. And you need to know for sure that you also know why you wouldn't want to buy this company. This is to check yourself to avoid biases, because if you have answered, let's say, all my 40 questions and all of them look great, you are gonna be able to think that this is the best company ever, but you need to stay grounded. You need to have both feet on the ground, and you need to keep thinking, and you need to keep thinking logically. You don't want to have recency bias, you don't want to have confirmation bias, you don't want to have any of the biases that are out there, and you want to make sure that you are investing logically. So ask this question and answer it and take your time answering it. And believe me, answering this at the end is easier said than done, because once you have convinced yourself that the company is great, it's going to be very hard to convince yourself otherwise. So take your time for this one and do not forget this one. So on to the final sheet. I'm just going to explain real quick what the investment checklist is about and how it looks like. So first I have like 8 or 9 categories, and with each category I have questions, and there's a question, it always has an orange bar below it, and then you have a field where you can answer the question. Some fields have some pre-selected answers, so like multiple choice, so to give how do you say that, to put you in to help you answering the questions basically, because some of these questions might be a bit harder. Also some are very easy and then you just have to say yes or no, so it's not that hard, but I still put in those 2 options. So there's about 40 questions, and when it comes to the growth numbers, which is basically comes after the initial checks, I have added to the right, and you may not see this when you open the sheet, so I'm just going to put it out there. I have added growth benchmarks. So I'm going to explain it. If you type in your maximum number, if it is the numbers you fill out in these fields, if it's above the maximum, it will show as green. If it's between minimum and maximum, it will show as yellow, and if it's below minimum, it will show as red. So this is basically to help you to easily see which growth benchmark of the growth numbers matches your benchmark. You can adjust these numbers, so I have it at 15% because I think that's a great number. I think 8% is not bad, but below 8% I know it's not going to be great how they're going to spend my money or how they're going to grow their company. So yeah, I have these numbers, but if you want to have it at 20%, feel free to just fill in 20% here, and the sheet will adjust that. So again, this investment checklist contains over 40 questions, and I'll leave a link in the description so you can download it. Please let me know what you think about the checklist, and if you enjoy the checklist and you enjoyed this video, consider leaving a like, because that would help me out a lot. For now, I wish you guys a great evening, and yeah, I think I'll talk to you soon again.